Are your bank accounts about to be scrutinized by the Department for Work and Pensions? If you're a senior receiving benefits, you need to hear this now. The DWP has just rolled out 3 new bank account checks this March that could affect your payments immediately. Have they already looked at your accounts without you knowing? What exactly are they searching for in your transaction history? Could your family gifts be mistaken for undeclared income? And most importantly, what happens if they find something they don't like? Thousands of seniors have already received notification letters you could be next, and preparation is crucial. Before we dive into these critical changes that could affect your financial security, make sure you hit that subscribe button and ring the notification bell so you never miss out on important updates that could protect your benefits. And if you know someone who receives pension credit, attendance allowance, or any disability benefits, share this video with them right now. It might save them from unexpected payment disruptions or even demands for repayment. Your quick action today could save someone significant stress tomorrow. Good day, everyone. I'm your name, and today I'm bringing you urgent information about new monitoring systems the Department for Work and Pensions has implemented this March 2025. These changes are specifically targeting benefit recipients, with a particular focus on seniors receiving pension credits, attendance allowance, and other age-related benefits. What makes these changes especially concerning is how quietly they've been introduced, with minimal public announcement, despite their significant impact. Let's break down what's happening in detail. The DWP has introduced 3 new types of bank account checks as part of their expanded fraud prevention measures. These aren't just random inspections, they are systematic reviews using advanced algorithms designed to catch discrepancies in your financial situation that might affect your benefit eligibility. The government estimates these measures will save taxpayers over £2.1 billion by 2027, but at what cost to your privacy and peace of mind? The first check involves direct access to your bank transactions going back up to 6 years. Yes, you heard that right, 6 years of your financial history. Under new powers granted to the DWP through the Data Protection and Digital Information Bill, they can now review your complete banking history to look for unaccounted income or savings that exceed the thresholds for benefit eligibility. They are scanning for regular deposits, unexpected lump sums, or patterns that suggest you might have additional income sources you haven't declared. This includes money from part-time work, cash gifts from family members, or even regular payments for selling items online. Many of you have been asking, is this even legal? Can they really look through my private financial information without my specific consent? The answer is yes. The government passed legislation last year giving the DWP expanded powers to access financial records when investigating potential benefit fraud. This isn't just about catching deliberate fraudsters, it's about ensuring everyone receives exactly what they're entitled to, no more and no less. But it does represent a significant shift in how your personal financial information is treated. What's particularly concerning is how this might affect innocent transactions. For example, if your children regularly transfer money to your account to help with groceries or utility bills, could this be flagged as undeclared income? According to DWP guidelines, regular financial support from family members should be declared if it's used for basic living expenses rather than occasional gifts. But the line between support and gifts can be blurry, and many families haven't considered these distinctions when helping elderly relatives. The second check focuses specifically on savings accounts and investments across multiple institutions. The DWP is now cross-referencing data with banks, building societies, and investment platforms to identify if benefit recipients have savings above the allowed threshold. Remember, for most means-tested benefits, including pension credit, having savings over £16,000 can disqualify you from receiving payments. But what many seniors don't realize is that joint accounts with family members, trust funds, premium bonds, or even certain investments like ISAs can count toward this limit. This brings up several important questions. What exactly counts as savings? What about money I'm holding temporarily for someone else? What if I've recently sold my house and have the proceeds sitting in my account while I look for somewhere new to live? The DWP considers cash in bank accounts, investments, bonds, shares, and even property that isn't your main home as potential savings. They are now using sophisticated data matching techniques to find these assets, even if they are spread across multiple institutions. Temporary large sums should be explained to the DWP promptly to avoid misunderstandings, and documented evidence of your plans for the money may be required. Another complexity many seniors face concerns insurance payouts or compensation. If you've received money for a specific purpose like home repairs after damage or medical treatments following an accident, this money might be disregarded for a reasonable period. However, you need to keep clear records showing that the money is being used for its intended purpose. The third check is perhaps the most concerning for many seniors. They are reviewing overseas transfers and foreign accounts with unprecedented scrutiny. If you've been sending money to family abroad, have pension arrangements from another country, or make regular payments for a holiday home, the DWP will now be able to see these transactions. They are particularly interested in regular payments going out of the country that might suggest you are actually living abroad while claiming UK-based benefits, or that you have financial resources in other countries that should be factored into your benefit assessment. This overseas monitoring extends beyond simple bank transfers. The DWP is now working with international financial intelligence units to identify benefit recipients who might have assets or income streams in other countries. This includes property, pensions from foreign employers, investment accounts, or regular financial support from family members living abroad. If you have connections to another country, perhaps because you worked there in the past or have family roots elsewhere, this increased scrutiny could affect you directly. You might be wondering, what happens if they find something that looks suspicious? Will my benefit stop immediately? If the DWP identifies discrepancies, you'll typically receive a letter requesting an explanation within 14 days. Don't panic if this happens. There are legitimate reasons for many financial situations, and you'll have the opportunity to provide context and documentation. However, failing to respond or provide adequate explanation could result in your benefits being suspended pending investigation, which can cause significant financial hardship while the matter is resolved. It's worth noting that these checks aren't just happening when there's suspicion of fraud. The DWP has moved to a system of random sampling as well as targeted investigations based on risk assessment algorithms. This means even if you've been completely honest and accurate in your benefit claims, you might still have your accounts reviewed. The department plans to conduct over 2 million of these reviews annually, affecting a substantial percentage of benefit recipients. For those of you concerned about privacy, I understand your worries. These new powers represent a significant expansion of government oversight into personal finances. However, the DWP has stated that all data access is governed by strict protocols, is only used for the specific purpose of benefit verification, and is protected by robust security measures. Staff accessing your financial information must have specific authorization and training, and there are penalties for misuse of this data. So what detailed steps should you take now to protect yourself? First, ensure that all your benefit applications and updates are completely accurate. Review your savings across all accounts and investments to know exactly where you stand in relation to the thresholds. If you've recently received an inheritance, sold property, or had any other significant financial changes, make sure you've reported these to the DWP using their change of circumstances form or helpline. Keep meticulous records of any unusual transactions in your account, especially large deposits or withdrawals. This includes gifts from family members, insurance payouts, property sales, or money held temporarily for specific purposes. Having documentation ready will make responding to any queries much easier and faster. If you share financial responsibilities with family members, have a serious conversation about joint accounts and how they might affect your benefit eligibility. Many seniors don't realize that money in a joint account is typically considered to be 50% theirs, regardless of who deposited it or who actually uses the money. This can inadvertently push you over savings thresholds even when the money isn't really yours in a practical sense. Consider restructuring how family members provide support if necessary. Instead of direct cash transfers to your account, which might be flagged as income, family members might pay bills directly or provide support in non-cash forms that don't affect benefit calculations. Regular patterns of cash deposits are particularly likely to trigger automated flags in the DWP's new monitoring systems. For those of you with international connections, be particularly careful about how you manage transfers and communications. Even extended stays with family overseas can sometimes trigger flags in the system if they appear to suggest you're no longer primarily resident in the UK. The DWP now has access to travel records and can cross-reference these with benefit claims to identify potential residency issues. If you own property abroad, even if it's just a small holiday home or inherited family house, ensure this has been properly declared. The value of second properties, whether in the UK or overseas, generally counts toward your capital limits for means-tested benefits. The DWP's enhanced data sharing with foreign authorities makes identifying undeclared foreign property much easier than in previous years. Another area that catches many seniors by surprise is rental income. If you rent out a room in your home, have a lodger, or rent out a property you own, this income must be declared. The DWP can now identify rental arrangements through bank transaction patterns even if you haven't formally registered as a landlord. Some rental income may be disregarded under specific schemes like rent-a-room relief, but you need to ensure you are following the proper guidelines. For those receiving disability-related benefits, be aware that the DWP is also looking at social media and other online platforms as part of their broader investigation strategies. While this isn't directly part of the bank account checks, it's worth mentioning that inconsistencies between your declared capabilities and activities shown online could trigger a deeper investigation that might include financial reviews. If English isn't your first language or you have difficulty understanding complex financial matters, don't try to navigate these changes alone. Seek help from trusted family members, community organizations, or advice services like Citizens Advice. The consequences of misunderstanding these requirements can be serious, including benefit suspensions and even demands for repayment of substantial sums. These new checks may seem intimidating, but staying informed and proactive is your best defense. The goal isn't to frighten you, but to ensure you're prepared and protected as these new measures roll out across the country this March. Remember that the vast majority of honest benefit recipients have nothing to worry about, provided they understand the rules and keep their records in order. If you're concerned about any aspect of your benefits after hearing this information, I recommend contacting the DWP directly to clarify your situation before any issues arise. Being proactive demonstrates good faith and can make resolving any potential misunderstandings much easier. You can also seek independent advice from organizations like Age UK, Citizens Advice, or your local welfare rights service, who can provide personalized guidance based on your circumstances. For those of you who might be affected by these changes, consider setting up a dedicated benefits diary where you keep records of all significant financial events, communications with the DWP, and copies of any evidence you might need. This simple step can save enormous stress if questions do arise about your entitlements. If you found this information helpful, please give this video a thumbs up and share it with friends who might benefit. Drop a comment below if you have questions about specific situations. I try to respond to as many as I can, and other community members often share valuable experiences and advice too. And don't forget to subscribe for more timely updates on benefits, pensions, and financial matters affecting seniors. I'm planning a follow-up video next week covering exactly how to respond if you receive a DWP investigation letter, so make sure you don't miss it. Thank you for watching, and remember, knowledge is your strongest asset when navigating the benefits system. Stay informed, stay prepared, and I'll see you in the next video. Until then, take care of yourselves and each other.